Good morning, ladies and gentlemen. Thank you for attending EDP first quarter 2023 results conference call. We have today with us our CEO, Miguel Sousa Andrade, and our CFO, Rui Teixeira, which will present you the main highlights of first quarter 2023 financial performance. We'll then move to the Q&A session, in which we'll be taking your questions both by phone or written questions that you can insert from now onwards at our webpage. Please note that later this morning we'll host our, I will give now the floor to our CEO, Miguel Sousa Andrade.
Thank you, Miguel. Good morning, everyone. Again, thank you for attending this results conference call. I suggest we go into slide 3 and kick off the presentation. Essentially, what I'd say is that what you can see on this slide is that the first quarter was marked by a very strong financial and operational performance, mainly supported by the recovery of hydro conditions in Portugal. We had a very strong EBITDA of 1.4 billion euros, mostly driven by the recovery of the hydro conditions in Portugal, as I mentioned, but resulted in a production of around 3.5 terawatt hours, 0.4 terawatt hours higher than expected for the quarter. Wind and solar EBITDA, 0.1 billion euros higher year-on-year, driven by higher installed capacity, higher generation, and a ramp-up of selling prices. Electricity networks in Brazil also grew, given inflation impact in tariff updates and transmission expansion in Brazil. We had improved energy management with a decrease in electricity and gas sourcing costs from the peak levels in 2022. Overall, going down to the bottom line, we get recurring net profit above 300 million euros. This can be explained obviously by the EBITDA growth. It's then mitigated by an increase in financial costs and income taxes, given the improved results in Portugal and Brazil, two countries that have an effective tax rate above portfolio average and no asset rotation gains in the first quarter of 2023. I know this is something that some of you commented in earlier this morning, and basically just to give you a highlight on that. Also, just to mention, 2 days ago, EDP paid a dividend of 0.19 per share. That represents a dividend payout ratio of around 86%, so on 2022 recurring net profit. We move on to slide 4. As I already mentioned, hydro generation recovered from the very weak first 9 months of 2022 and an absolutely disastrous hydro of the first quarter of last year. So on the left, you can see that we moved from a hydro shortfall of 2.6 terawatt hours first quarter last year to 0.4 terawatt hours above expected in the first quarter of 2023. So quite a strong recovery here to more normalized levels. Additionally, note that although February, March, and April were dry months, our reservoir levels remain high at around 80% of their maximum capacity, which is higher than the historical average for this time of the year. And it's considerably higher versus the 2022 abnormally low levels. This being said, good hydro generation levels in 2023 so far and high reservoir levels provide some comfort for the remainder of 2023. So I think the fact that we're at these levels as of today, already in May, set us up well for the rest of the year. Moving on to slide 5. Once again, I think this showcases really the robustness of the Portuguese electricity system in terms of stable energy prices. So as you know, Portugal has a significant weight of long-term contracted renewables in the energy mix, and it was able to maintain stable end-user electricity prices during the European energy crisis of 2022. So, as I say, good resilience, good robustness to the high electricity and gas wholesale prices. The Portuguese consumer, the domestic consumer, was basically insulated from last year's escalation of prices and even this year as well. So, in general, we've been able to keep relatively stable and flat prices throughout this crisis. You can see that on the left. So both residential and industrial segments had essentially price increases in the second semester of 2022, but very low. According to the Eurostat data, 2% for residentials, 5% for industrials. We also had some Eurostat data which came out recently, which showed that Portugal has actually become much more competitive in terms of the cost of energy versus the rest of Europe. This was all done without compromising financial stability, and the Portuguese electricity system debt decreased by more than 2 billion euros over the last 2 years. So it's reduced in approximately half over this period. For 2023, the lower than expected wholesale prices in this first quarter imply some short-term negative deviations. This should be corrected very soon, as the Portuguese independent regulator has already communicated its proposal to review the access tariffs starting from the 1st of July 2023, already taking into account these lower wholesale prices and so adjusting the access tariffs to take this into account. If we move on to slide 6, wind and solar, very much focused on execution. As I've mentioned earlier this week, we've already contracted 1.5 gigawatts since the Capital Markets Day, mostly in Europe and in the US. This leaves us with around 8.5 gigawatts of secured capacity, about 50% of the capacity targeted for the business plan since 2026, or until 2026. And then of these 8.5 gigawatts, 5.7 are secured for 23 and 24, so around 75% of the target additions for this period. So on track to deliver on our growth ambitions. Also highlighting that we have 5 gigawatts of capacity under construction, of which we expect to install around 3 gigawatts in 2023, and we continue to ramp up the capacity under construction over the next couple of months. As I mentioned on Wednesday, we have about 0.9 gigawatts of solar PV installations in the US that are moving from 2023 to 2024, essentially related to the delay of solar modules from LONGi. As I've mentioned, this is unfortunately taking more time than expected to fulfill the customs and border protection documentation requests, and I believe LONGi is working to get that done as soon as possible. In any case, we are assuming that these 0.9 are moving to 2024. However, we haven't been stopped, obviously. We've been adapting and diversifying our solar supply chain strategy to make sure that we can continue to deliver on the business plan. So we've secured 1.5 gigawatts with First Solar in the US for the post-2024 CODs, and we're now working with more than 5 solar manufacturers for 2024 installations to guarantee we do not have similar setbacks in the future. All in all, I think we continue with good performance on securing new capacity to be installed, and that gives us confidence on achieving the targeted additions until 2026, despite some setbacks on the US solar additions in 23. If we move on to slide 7, and let's talk about our solar DG business. As of March, we had an installed capacity of 0.8 gigawatts, of which 0.3 were installed over the last 12 months. So a very meaningful 66% capacity growth over this period. Since 2020, we've already secured 1.8 gigawatts, of which 0.8 are installed, 0.4 are transactional, meaning that they're built and then transferred to the customer, and 0.6 are under construction or secured to be added. We continue to be very confident on this technology's future prospects. Last week, we signed a framework agreement with Google to install up to 500 megawatts AC in local energy communities in the US. In Europe, DG is going through a high growth momentum with more than 100 megawatts AC of new DG capacity signed over the last 2 quarters. And in Asia Pacific, we have around 120 megawatts AC of solar DG under construction. So in this region, we've already secured 40% of the additions for 2023 to 2026. If we move now to slide 8, and talking about interest rates. So we continue to manage our exposure to interest rate risk. As of March, we have 73% of our debt with fixed interest rates, and part of the debt with floating interest rates is matched by asset exposure to inflation in Brazil. Debt in Brazilian reais represents around 15% of our total debt, and the EBITDA from Brazil represents around 30% of the total, which clearly demonstrates that we are inflation hedged here. As we mentioned in 2022, we closed around 2 billion euros of pre-hedged interest rates for 23 and 24 refinancing needs. So we have 1 billion euros and $1 billion pre-hedged at around 1.8% and 2.6% respectively. Very competitive prices versus the current one. So reducing the interest rate risk for upcoming refinancing needs. Regarding expectations on asset rotations, we stick to the capital gains of around 0.3 billion euros, given that the clean energy and ESG components of the assets more than compensate the move of interest rates over the last 2 years. So we're continuing to see demand, we're continuing to see the value there, and I've talked about that also as well. So overall, asset rotation transactions planned for 23 on track to deliver the expected returns. Move on to slide 9, and just a quick word here on an update on the tender offer on EDP Brazil minorities. The auction is expected to happen in the 3rd quarter. We've been working on this and already completed several milestones, and we expect the CVM approval, so the market regulator in Brazil approval, between May and June. As we mentioned in the Capital Markets Day presentation, the expected 1 billion euros of investment was already funded through the share capital increase up at the EDP level carried out in March. So we're very confident that the success of this transaction will be translated into a simplified corporate structure, and it's fully aligned with our strategy focused on renewables and electricity networks. Moving on to slide 10, just before I pass over to Rui. Good performance in terms of emission reductions in the first quarter of 23. We're fully committed to decarbonization, with Scope 1 and 2 emissions intensity decreasing year on year by almost half. You can see this puts us on the right track to achieve our ambition of reducing those emissions by 95% in 2030 compared to 2020 levels. I'd also highlight that EDP's climate transition plan was submitted for advisory vote at the 2023 AGM, and it was approved with 99.73%, which clearly shows the confidence that investors have in our ambition regarding net zero targets. Also, supported by the normalization of hydro resources in Portugal and the subsequent decrease in thermal activity this year, renewables accounted for 88% of total generation, which is 10 percentage points increase year on year, and the revenues from coal decreased 4 percentage points year on year to 4.7%. We also improved our alignment with the EU taxonomy, so 67% alignment for revenues, that's 14% higher year on year, and 97% alignment for the CapEx investments. Finally, just to reiterate our ambition to reduce Scope 1 and 2 emissions, supported by being coal-free by 2025 and 100% renewable by 2030, focusing our investments in renewables and electricity grids. So with that, I hand it over to you, Rui, to deep dive on the financials, and then I'll come back for closing remarks. Thank you.
Thank you, Miguel. Good morning to you all. So I'd like to go through the EDP's financial performance in the first quarter. So please go to page 12. Recurring EBITDA increased by 2 times year on year to above 1.4 billion euros in the first quarter of 2023. As you see, recurring EBITDA for renewables, clients, and energy management was up by 0.7 billion euros, mainly driven by the recovery of hydro in Portugal to normalized levels, improved energy management results due to lower electricity and gas sourcing costs, and higher wind and solar EBITDA on the back of an 11% increase in generation and 8% increase in average selling price. Moreover, in the electricity networks, EBITDA increased by 5% year on year, driven by the growth in Brazilian networks due to the positive annual tariff updates and the growth in the transmission business. Please do note that in the first quarter in 2022, we were heavily penalized by the extreme drought together with record high energy prices. So if we move now to slide 13, EBITDA for EDPR increased 14% year on year. That was the result of 5% growth in installed capacity to 14.8 gigawatts. That together with good renewable resources led to an 11% increase in electricity generation. The generation was sold at an average selling price of 62.5 euros per megawatt hour, which is 8% higher year on year. And this was across all the different regional hubs with year on year growth. Europe growing 21%, North America 14%, and South American and APAC more than 6 times, mainly due to a strong delivery of organic growth in Brazil, namely the commissioning of a couple of, or actually 3 large plants, Boqueirão, Jerusalém, and Monteverde, with a total of 0.6 gigawatt, and the impact of SunSip integration since February 2022. Also, please note that we had no results from asset rotation gains, neither in first quarter 22 nor in the first quarter of 2023. So now on slide 14, from an integrated perspective, hydro, clients, and energy management was marked by an overturn in operating conditions following the extreme adverse first quarter 2022. In Iberia, results were positively impacted by the normalization of hydro resources, with generation being 3.5 terawatt hours, which is more than double versus last year, and approximately 0.4 terawatt hours above our expected production. This positive impact was mitigated by the decrease in thermal generation, with coal and gas-fired power plants producing almost half of first quarter 2022 volumes. On energy management, there was a decrease in electricity and gas sourcing costs. This has mainly to do with the 58% decrease in electricity spot price in Iberia to an average of 96 euros per megawatt hour in the first quarter of this year, and 47% decline in gas spot prices to an average of 52 euros per megawatt hour gas. In Brazil, EBITDA slightly decreased by 2 million euros with better hydro conditions, but lower volume from the sale of Mascarenhas hydropower plant in the fourth quarter last year. So now, as we move into slide 15, just highlighting the year-on-year dynamics of the integrated portfolio. So hydro, client, and energy management has a negative EBITDA in the first quarter 2022, mainly impacted by the negative 0.4 billion euros from the hydro shortfall, simultaneously with these record high electricity prices that we observed in the first quarter of last year, and the mark-to-market on gas hedging contracts that last year was not recognized through hedge accounting, and that suffered from a sharp increase in the spread TTF to Henry Hub. In the first quarter this year, we saw a strong rebound in Iberia. So we had lower electricity and gas sourcing costs, given the decrease in electricity and gas spot prices, normalization of hydro resources in Portugal versus the first quarter last year, and finally, a positive year-on-year comparison with no material negative impact from mark-to-market on energy contracts in the first quarter this year. And this is mostly related to the derivatives of Cheniere gas contract. You may remind that we addressed this and solved this since Q3 last year. So this being said, we reached an integrated EBITDA of 0.53 billion euros in Iberia, which we believe is above a normalized level per quarter, which should be more in the range of 0.3 to 0.4 billion euros. So now looking into the networks performance on slide 16, networks EBITDA increased 5% year-on-year, reflecting mainly a 16% increase in Brazil with transmission expansion and the tariff updates to inflation. In Iberia, EBITDA decreased 2%. In Portugal, actually, it increased 2 million euros year-on-year, with increase in the rate of return on RAB being mitigated by the increase in OPEX. But in Spain, EBITDA decreased 7%, given that first quarter 22 was impacted by a recovery of revenues from previous years. Excluding this impact, EBITDA in Spain would have been flat year-on-year. So please note that we will continue the work to be done in efficiency, digitalization, in terms of overall in our electricity networks. As of March, we have 6.7 million smart meters installed across all the geographies, of which 0.8 million installed over the last 12 months. So now let's move to the financial costs on slide 17. If we exclude FX differences and derivatives, adjusted net financial interest increased 27% year-on-year to 243 million euros, resulting in a 90 basis point increase in the average cost of debt to 4.8%. But this is mainly explained by two factors. One is Brazil, that represents around 15% of EDP's debt and more than 40% of the interest costs, given the higher cost of debt in Brazilian reais from last year's 12.6% to more than 14.3% in the first quarter this year. Please note that Brazil also has revenues indexed to inflation, and that's why we have this floating debt on a financial side, and therefore hedging at the net profit level. Euro and US dollar denominated debt was also experienced increasing, so we also saw the increase in the cost given the higher interest rate environment. Overall, cost of debt increased from 4.8 versus the 3.9% in the first quarter 2022. If we were to exclude Brazil, cost of debt reached only 3.1% in the first quarter 2023. And this is, of course, important also looking at financial liquidity on slide 18. Strong financial liquidity remained in our balance sheet in the company, with more than 10 billion euros of available liquidity, of which more than 4 billion are cash equivalents, and the remaining 6 billion of available credit lines from more than 25 counterparts. As we can see in the right-hand side of the slide, this liquidity covers the refinancing needs beyond 2025.
Moreover, and as Miguel said before, we already have around 2 billion of pre-hedged benchmark interest rate for a 5-year maturity, representing about 70% of 2023 and 2024 bond maturities. And this will provide a positive impact on the evolution of the average cost of debt over the next 2 years. On slide 19, our net debt
decreased to 13.1 billion euros as of March 2023 from 4 different factors. First, of course, is the recurring organic cash flow of 0.4 billion on the back of a very strong EBITDA performance in the first quarter. Regulatory working capital of 1.1 billion from the reversal of cash inflow that we registered in 2022. Net expansion investments that amounted to 1.2 billion. And finally, the 2 billion euros from the equity capital raises, of which 1 billion at EDP and 1 billion at EDPR. Finally, given the strong performance in the first Q this year and the referred 2 billion euros of equity raise, we reinforce our credit ratios, net debt EBITDA at 2.8 times and FFO net debt at 23% in the first quarter. And this is 3 percentage points higher year on year. To finalize, and before handing over to Miguel, I would like to highlight on the net profit on slide 20 that recurring net profit amounted to 306 million euros. That's a recovery versus the negative 76 million euros in the first quarter 2022, slightly below the previous quarter, although this time without any impact from asset rotation gains or any material impact from non-recurrent items. So below EBITDA, just to highlight that financial costs increased, as explained before, due to the higher cost of debt, mostly coming from Brazil. Higher income taxes, given that we had higher weight of earnings before taxes from Portugal and Brazil, which have higher corporate tax rates than the average of the portfolio. So with this, I will now hand over to Miguel for closing remarks. Thank you very much.
Okay, thank you, Rui. So just to wrap up the first quarter performance, a good start to the year, that's for sure. Sound results. Recurring EBITDA at 1.4 billion euros and net profit over 300 million euros. EBITDA growth supported by the normalization of hydro in Portugal, hydro volumes recovering, obviously from a very weak 2022, particularly the first 9 months, and generating around 3.5 terawatt hours of energy, 0.4 higher than expected. Wind and solar very solid as well, 5% increase in installed capacity year on year, 11% increase in generation, and also an increase in average selling price. In electricity networks, as I mentioned, positive impact from inflation updates on revenues. For the remaining part of 2023, we have a positive outlook. So we're seeing improving average selling prices as the hedges made last year roll over. Hydro reservoir levels currently above average at around 80% and lower electricity and gas sourcing costs. On renewables, regarding capacity deployment since the CMD, we've secured 1.5 gigawatts of renewables, reaching the 8.5 gigawatts I mentioned, around 50% of the target for 26, expecting to install around 3 gigawatts in our key markets, and reinforcing our strategy to diversify the solar supply chain to avoid further constraints. Funding and financial costs, positive on delivering target asset rotation for 23, average cost of debt being impacted by Brazil, but being balanced by having 100% inflation-linked revenues. 1 billion euros, $1 billion pre-hedged on new debt issues for 2023 and 2024. And finally, a reinforced balance sheet with the 2 billion euros raised in EDP and EDPR that will support the renewables growth and the EDP Brazil minorities buyback. So once again, thank you for attending this quarter's results. Miguel Viana tells me that a lot of questions have already come in online, but we can now move to Q&A and we'll take as many as we can. Thank you.
Okay, so we can go to the first question on the phone, which comes from Alberto Gandolfi from Goldman Sachs. Alberto, please go ahead.
Miguel, thank you, and good afternoon. Given we spoke about already quite a lot about the IRA opportunities in EDPR, I wanted to ask maybe 2 specific questions on numbers and one, again, a follow-up on IRRs from the other day. So I guess the first question is that I was wondering if you were surprised somehow by the evolution of the net debt in the first quarter. You know, you raised 2 billion, the net debt is unchanged. I think that your waterfall chart is very clear. It looks like this is still entirely an issue having to do with the regulatory working capital. So I guess my question is this correct? And when do you expect this to reabsorb, or should we expect incremental regulatory working capital for the rest of the year? Because this seems to be the biggest delta, if I'm right. The second question is that I see that there was no guidance for earnings. Usual question, Bloomberg consensus seems to be
between 1.1 and 1.2, call it 1.15 billion net income. May I ask if you're perhaps comfortable, very comfortable, or no comment? I mean, you just delivered more than 300 million with lots of taxes in it, and you're talking about rising prices and lower sourcing costs and more capacity for the rest of the year. So, to which we need to add asset rotation gains. So it seems that if I were to guess, I would guess you must be very, very comfortable with consensus. Last question. The other day, you talk about PPAs moving to 60, 70 euros or dollars per megawatt hour. May I ask if this is anecdotal or actually you see this pretty consistently in the new auctions and new PPAs? I just was trying to understand how sustainable is that, because the other day you reiterated you're comfortably above 200 basis points over WACC on returns, and given so many investors are skeptical on the ability to create value, any extra light you could shed would probably be much appreciated. Thank you so much for your patience.
Thank you, Albert. So a couple of comments, and then I'll ask Rui also to comment on the net debt issue, but I just say there that it's well within expectations and something that didn't surprise us. But going to your comment on the guidance. So we are comfortable with the 1.1 billion, in line with what we said in our capital markets day 2 months ago. And maybe just going a little bit deeper and giving you a bit more color on that. So we see in 2023, obviously, and as you've noticed in the first quarter, a higher expected contribution from the Iberian integrated generation and supply business. And I know there have been comments about the way we're presenting this, but more and more we see this as an integrated let's say value chain, certainly on the generation supply. So we're not splitting it out. We may evolve again if you get additional comments on this, but we do think it reflects sort of this integrated margin that we see. So rather than the volatility on some of the pieces underlying it. But anyway, the higher expected contribution here. As we mentioned, we have had some capacity additions that have been delayed from 22 to 24, and also some decline in the average selling price for in EDP renewals, so with some significant clawback. So, we've been guiding, I think, EDPR down. Certainly, that's what we mentioned in the call on Wednesday. I just wanted to reiterate that now. Financial results slightly higher than last year, but penalized by the higher cost of debt, but we expect it to be stable at around 4.8%. Effective tax rate, as you mentioned, the first quarter is high, but we expect it to settle at around the mid-20s over the rest of the year. This is because of the mix of where the profit is being generated. So it's got a lot of Brazil, a higher weight of Portugal, which has a higher effective tax rate, as you know, around 31%. So it's really a function of the mix. Over the year, this mix will evolve, as you also have asset rotations and other things coming in, and so it should be at the mid-20s, and then going forward after that, probably in the low 20s, so post-2023. So hopefully that's a little bit of color in terms of guidance, but just coming back to the beginning, so we're comfortable with the 1.1. On the PPAs, so the 60, 70s is definitely dollars per megawatt hour is definitely something we're seeing in the US. I mean, that's we're very comfortable with that. 60, 70 euros per megawatt hour in Europe, in Northern Europe, is also something that we are seeing. In Southern Europe, it typically also has a higher resource, both solar and wind, probably more in the 40s. So this is not anecdotal. This is concrete PPAs that we're signing and that we're locking in. So as I mentioned, we secured 1.5 gigawatts over the last 2 months, and these are sort of the prices that we're seeing let's say the projects. This is obviously reflecting higher capex, higher cost of capital, but then you're having these higher PPA prices. And so I've talked about it on previous calls. We reverse engineer the PPA prices to make sure that we get the desired returns, and and then we go out and we market it at those prices, and we've been able to lock them in for with good customers, both corporates and also regional utilities, particularly in the US. So it's definitely not anecdotal, or it's very concrete, specific data points. On the debt, Rui, do you want to comment a little bit more?
Thank you, Miguel. Hi, Alberto. So on the debt, we, in December, when we presented the results, we had about 1.1 billion euros of a positive impact in our net debt by then. And this was about approximately 0.6 billion as regulatory payables, effectively, and 0.5, so that was 0.6, and then 0.5 billion of working capital, so some cash anticipation from 2023 into 2022 that we also provided visibility. So as of March, this impact in our balance sheet has decreased significantly. It's approximately zero right now. So that's why we are booking, or we're showing this 1.1 billion of negative outflow in terms of the regulatory receivables. This pace of reversion, we were expecting this to take, to impact the first quarter, because as the wholesale prices started to decrease throughout the quarter, then that superávit that is created between the wholesale price and the renewables tariffs that goes into the system, that positive delta started to reduce, and the tariffs were fixed. So we were expecting this to have this impact by the end of the first quarter. Given that right now the regulator presented already the proposal for the tariff revision for the second half in 2023, we see that what's being proposed, it will adjust the access tariffs to reflect the current wholesale market prices, and this should be stabilizing the regulatory receivables. In any case, this only applies to the second half of the year, so we are expecting to see some increase in regulatory receivables during the second quarter in 2023. So what we are expecting is that this will still, we'll see that increase. Then we should see sort of a more flattish or stable into the second half. And we are also expecting that whatever deficit or deviations could be created, that we will also would be working to securitize those throughout the rest of the year. So our expected, let's say our forecasted debt for 2023 is around 15 billion euros. But that's really what explains the 1.1 delta that you see now in the first quarter.
Very clear. Thank you.
Thank you, Alberto. So going to the next question on the phone from Javier Garrido, JP Morgan. Javier, please go ahead.
Thank you, Miguel. Good afternoon. I think most of my questions have been answered. The only remaining question I would have is on the comment that we made on the call that the normalized contribution from the Iberian hydro client and energy management business would be between 0.3 and 0.4 billion euros per quarter. I was wondering, what is normalized? I mean, and are you thinking of normalized as normalized contribution with power prices around the 100 euros per megawatt hour level, or normalized contribution with lower power prices in line to where we were before the Ukrainian invasion? Just wanted to understand what is the concept of normalized you are thinking of for this range. Thank you.
Hi, Javier. We're here. So yes, I mean, normalized in the sense that production was also higher than what we were expecting. Also, the fact that, all in all, from an integrated perspective, we are seeing a margin that should be reducing on a normalized basis for the coming quarters. So that's why I wanted to highlight, so you don't take the 0.53 billion as sort of a reference for what the normal quarter should be, and adjusting for volume and for the integrated margin more towards the 0.3, 0.4.
I think I was in mute. Just thank you, Javier. Going to the next question from Jorge Guimarães from JB Capital. Jorge, please go ahead.
Good afternoon. I have three questions, if I may. The first, it's if you can elaborate on the 0.2 billion of hedging mark-to-market that you mentioned in the presentation. What is exactly this gain?
The second one is if you see any risk for the takeout of the buyout of minorities in Brazil. And the third one, and probably the one where I'm most interested in. It's if you see the current trend rate of pumping in Portugal as sustainable, because there was no rainfall in Portugal in April, yet the reservoirs are stable month on month, and you are pumping a lot. But as time goes by, the reservoirs will go down. So how far can you sustain the current pumping levels as the year progresses? Thank you very much.
Okay. Thank you, Jorge. So, you can probably talk about the first one. I'll just give you some color on the second one, on the buyout of Brazil. And then I think we can comment also on the pumping. So just in Brazil specifically, listen, we're very comfortable. I mean, if we think about the current price is at around,
we came out at 24 reais per share. Dividend adjusted, it's at 23.73. The current market price is below that. It's at 22.58, which is basically, let's say, that value discounted for the Selic. So I'd say, it makes financial sense for the minorities to accept this offer, and we're certainly working on that basis. So I'd say the risk of not achieving this is low, or at least for a rational investor. So we're confident about that. In terms of the mark-to-market, where do you want to take that?
Sure. So, hi, Jorge. So the mark-to-market is really a year-on-year impact. So the 0.2 billion is a year-on-year impact. Just to recall, in the first quarter last year, we booked 80 million negative impact from mark-to-market, and that was related to the Cheniere contract, the gas contract, and an accumulated negative impact of approximately 0.2 billion by the end of the semester. Since June then, as you may remember, we start moving these contracts into hedge accounting. In the first quarter, we have no negative impact related to this, to any mark-to-market, and we are benefiting from the higher gas margins given the low sourcing costs that are booked in this quarter, and also related to the negative mark-to-market booked last year. So the negative mark-to-market was because it was hedging, then we would see this positive impact in 23, 24. It was actually mostly in 2023. So, I mean, the 0.2 is a year-on-year, and of course now we are seeing the margin. We see in the margin that the reversal of that negative impact. And concerning the third question on the pumping, I guess that what we have been doing is, from an energy management perspective, given that we have a much more balanced position, then we can, at some point as we see the market price going down, we go short in the sense that we will stop producing, definitely the coal. We'll stop producing less gas, or produce less gas. We may reduce as well the hydro production, and ultimately also buying electricity for the pumping. So that's something that has been managed very actively over the first quarter. In that active management will continue to happen throughout the remaining quarters.
Yeah, and Jorge, I just add that we see this as sustainable, also not just short term, but mid to long term. And one of the things you probably have seen, certainly over the last 2 months, is the duck curve, right? With more solar coming in and pushing the prices sort of midday. So I think pump storage is really coming in to its own now, and it's creating quite a lot of value, as we've all been defending. So we see this sustainable both in the short term, as we talked about, and also mid long term. Thanks.
Thank you, Jorge. Moving to the next question on the phone from Manuel Palomo from BNP Paribas. Manuel, please go ahead.
Hello, good morning, and thanks all for taking my questions. Sorry to insist on the first one, but I'd like to ask a bit more on the hydro and the hydro levels. We use this. Previous analysts have been saying it's that there's been a big recovery in the months of November, December, January, but since February, rainfall has been pretty scarce, I would say, all across Iberia. So I wonder whether you could give us an indication on what is your better expectation about the electricity production from hydro in Portugal for the year 2023, given that it's been pretty volatile in the last 3 years, 12 terawatt hours in 2020, 9 in 21, and not even 6 in 2022. So if you could give us a view on what's your production expectation, that would be great. The second one is just a follow-up on one of Alberto's questions. He was asking about debt and about working capital. I was wondering whether you could give us an estimate on what is the level of tails that you assume for the year end. And the last one, in the EDPR presentation, I could see that the impact from non-cash items on the financial charges was in the region of 35 million. I wonder whether you could quantify what was the figure for EDP in this first quarter. Thank you very much.
Thank you, Manuel. So in relation to the hydro, yeah, as you say very rightly, so December, January, very wet months and, huge buildup of the reserves. And then we've been managing that over the last couple of months. As we mentioned, this is actually, we've actually been managed to conserve a lot of water and just take the margin, buying it cheaper in the market. So we're above the average for the year. For the rest of the year, we assume an average year. So that's the typical, as you know, it's almost impossible to do any predictions really more than 2 weeks or so. So it's very volatile. We've looked at all types. We could have almost a morning discussion on predicting weather patterns and whether El Nino will come back and the implications of that in the US and then in Europe. And we look at that. We have a great team for energy assessment which looks at that. But basically, bottom line is almost impossible to tell. The best predictor is to just assume the average for the rest of the year. There is more volatility, at least intuitively, it feels like there's more volatility, but around let's say, stable long-term trend. But that's certainly the case more for hydro because, as you know, wind and solar tend to be much less volatile than hydro. In relation to debt and the impact of non-cash, Rui.
Sure. Manuel, hi, it's right here. So just to be clear, I think that your question was related, the second question was related to the level of the tax equity partnerships forecasted for 2023. Is that it?
Yes.
Okay. I think, it will, I would probably see it pretty much in line with what we have today, depending also and increasing also with some of the wind farms that will be commissioning this year. So around this 1.1 commission this year. So I would say, excluding the plans that we are delaying for 2024, maybe an additional 600 million, give or take. So from where we are today, an additional 600 million. Yeah. So and then related to the third question, and here I think that you were referring to the negative impact on financial costs from Forex mark to market. Is that it?
Yes, that's again.
Okay.
Thank you.
So yeah. So basically, what we have is as we on our net investment policy, we are of course protecting our equity against FX variations. So we are contracting forwards on the FX for the different currencies. But there will always be some inefficiency because at some point we will be rolling these forwards. So there is a delta that is created by the difference between interest rates between euro and the currency that we are covering. That delta, we need to market that, and it goes into our books. It's a non-cash item. It will be varying over each quarter. It will depend on the volatility of the different currencies versus the euro, but it's effectively that. So that's in consolidated levels in the first quarter of 2023, we have about 22 million euros coming from that. But it will depend really on the evolution of the on the forex on the different exchanges. But really, it's just the consequence of having this net investment policy to protect the equity.
Okay, so we can go to the next question from the phone. So the next question comes from Fernando Garcia, Royal Bank of Canada. Fernando, please go ahead.
Thank you, Miguel. Good afternoon, everybody. Thank you for taking my questions. Only two left for me. First, on the recurring tax rate of 31% in the first quarter, my question is if this is a good indication going forward as asset rotation. My second question actually is a couple of questions on regulation. Do you think that there is any read across from the Constitutional Court ruling on gas distribution about the Portuguese extraordinary tax for electricity? That will be my first question on regulation. And the second one will be if you can update on the Portuguese social tariff financing. Thank you.
Okay. Rui, do you want to take the first one? Yeah.
Okay. So yes. So I think that in the tax rate for the year end, we estimate it to be around mid-20s. As we said this morning, this year, because of the impact from first quarter results coming from Portugal and Brazil, where we have the highest tax rates.
That's where we land into this 31%. If you exclude the 1.2% tax in Spain, this actually comes closer to 29. So as we move towards the year end, then we see, of course, an increased contribution coming from the renewables, from EDPR, and also, as you know, on the asset rotation side, those typically are not, we don't book any taxes on those capital gains. We expect the tax rate to come down, so that's why we're guiding around the mid-20s.
Okay. On the regulation, so in relation to the sales, so the extraordinary contribution, what came out from the Constitutional Court, for those of you that haven't followed, is relating to the natural gas sector, and essentially it reopens the debate on the maintenance of this contribution, certainly over the short, medium, and long term. Essentially, what it says is that as of 2018, the extraordinary circumstances were no longer in place. Particularly in relation to the gas, it made no sense for them to be paying it when a big part of it was going into the electricity sector, was being sort of put into paying down the debt of the electricity sector. So I think this, we are looking at the arguments that have been used by constitutional courts, and we are looking at, what should be our approach to this, whether it can be applied also to the electricity sector. We maintain, as we always have, that this is a tax or contribution which makes no sense. It incentivizes investment because it's a percentage on investment. So the more you invest, the more tax you pay. So it's not a good incentive for investment, and Portugal needs that. We've been, it's been public that it would be reducing over time with the reduction of system debt. 2/3 of this tax paid is going into paying the system debt. And so we believe it makes sense and that it will happen at some point, that this will start to reduce, hopefully sooner rather than later. On the social tariff, two messages here. One, as you know, we appealed to the European Commission. The European Commission said that we were right, that we have no problem with the social tariff. We think it's fine, and it's obviously government policy that we see a lot of merit in it, but it should not be financed the way it's currently being financed, which is mainly by EDP in Portugal. So as I said, the European Commission said that we are right. It should not be financed by EDP or mainly EDP. You should either finance it through the government budget, or you should find an alternative way. For example, in Spain, this is done by socializing it between the different market operators. The minister came out and said that they were looking at it and that they were going to review the financing scheme. And so, we expect that in the short term that this will be resolved and that there will be a fairer and more equitable way of financing the social tariff than the current one. So basically, that's what I'd say about that. Thanks.
Thank you, Fernando. So the next and last question on the phone is from Oliver Jeffrey from Deutsche Bank. Oliver, please go ahead.
Thanks. Good afternoon, everybody. So a few different questions, please. The first one is going back to if you go back to the CMD and what's changed since the CMD. I'm just interested to understand how you've seen kind of incremental changes on EBITDA. So I know that you got the headwind in EDPR with moving the 1 gigawatt of solar into next year. Is there anything else we should consider that's changed since the CMD in terms of your view on the incremental EBITDA change? So I believe it's a slight negative, but if you're able to quantify that, that would be useful. The next question, just going back to the Cheniere contract, just to understand this. So the mark-to-market last year was 200 million, which is meant to roll back, I think, 70% this year. Are you expecting anything else to roll back through the rest of the year, or is that now done? That would be helpful to know. The next question is on the normalized hydro. I didn't quite catch your answer. Did you say that you thought for the following quarters you'd expect 300 to 400 million, or is that just in Q4? And then just one more, which is on the asset rotation. I mean, I understand that you made it quite clear in the EDPR call that you're looking to do 300 million, kind of irrespective of pricing this year. I presume at the EDP level that it's probably unlikely that you'll get through any rotations this year. If you get an indication on whether that's more likely 2024 event, and then I'll leave it at that. Thanks very much.
Okay, Oliver. Thanks for the questions. So in relation to the CMD, I mean, it was only 2 months ago, so I don't think anything structural has changed, really. I mean, you talked about the 1 gigawatt or 0.9 moving into 2024. I mean, you'll see some different moving pieces, maybe the hydro in general has gone quite well. EDPR a little bit less well for this year, but certainly we see 2024 and beyond as staying, we're reaffirming the guidance. I mean, we see no reason to change what we talked about in the CMD just 2 months ago. On the Cheniere and normalized hydro, you can probably talk about, but maybe just, I didn't quite catch the fourth question. So the asset rotation, 300 million, I didn't quite catch what was the 2024 event that you mentioned.
That was just to ask at the EDP level. Should our assumption be this year that it's probably unlikely you'll do any rotations at the EDP level? I'm thinking of the transmission line in Brazil. My expectation that's probably more of a 2024 event, but if you're able to comment on that, either way would be helpful.
Yeah. Okay. So just before I turn it over to Rui, on that, on the EDP level, I mean, we'll continue to look at different transactions, including, for example, as we've talked about, we'll be doing PSA for sure. So it's not exactly asset rotation, but just in terms of disposal, PSA, probably some hydro in Brazil, and anything else that feels attractive to us. In terms of the transmission line, I would say probably not a 2023 event, but we can talk about that maybe in future calls. As of today, we're not necessarily counting on it for 23, but we'll update you again if you want on the July call. In relation, Rui, if you want to take number 2 and 3.
Sure, absolutely. So on the Cheniere, what we said in fact also last year is that about 70% of those mark-to-market losses would be reverted through 2023 and the rest in 2024. So what you're seeing now in the first quarter is really a part of that, but we'll see more coming through the rest of the year. Again, overall, for the overall losses that we booked in 2022, or the mark-to-market losses that we booked in 2022, 70% of those should be recovered during this year. And then, so to be clear, my normalized comment is more normalized first Q. So as you know, typically on the hydro, first and fourth quarter are stronger. Second and third are typically not so strong. I just wanted to make sure that, as a first quarter result, the 0.53 billion, you don't take it as a normalized first quarter. That would be more within the range of the 3.3 to 0.4.
Thanks. And then just as one follow-up on the social tariff.
within the kind of the soft guide that, I know you haven't given a guide, but you've spoken about happy with consensus at 1.1. Are you assuming that any of the social tariff comes off this year, or is that will mainly 2024?
We are assuming that they will find a model which is more equitable this year, and which probably reflects better something like the Spanish model. So there's already built into that forecast some expectation of a change in financing, given that the minister and the European Commission have both been relatively clear about the need to do that. So yes.
Thanks very much.
Okay, so we'll move now to a couple of questions on the phone, on the web, from Jorge Alonso from SocGen, regarding the update on Brazilian assets potential disposals.
Yeah, well, yeah. Hi, so sorry, Jorge, it's Rui here. So just to be clear, Brazil, we are considering, as of now, the sale of PSA, the coal plant. That is, going as planned. We should be getting the binding offers over, the second quarter or during the second quarter. And of course, we'll update you with that. Then we have the transmission lines that Miguel just said. We may update you as well, coming further into the next conference call, the results, the earnings call. And then within the renewables segment, this is one of the countries that we are also assessing whether we do or not an asset rotation this year on the renewables space. But we have already, started engaging with potential investors, and we'll also update you as we, go firmer into the process. And also on the hydro sale, I mean, this is something that we'll be preparing. As you know, we concluded the sale of Mascarenhas in December of last year. We know that at some point we'll also work on this potential sell down. So we'll provide you more color as these processes actually move forward. Thank you.
So I think the other questions that we had more or less they were mostly covered. So if pending ones we'll do follow up at IR level, and so I'll move now to our CEO for closing remarks.
Okay, thank you, Miguel. Listen, just very briefly, I think great start to the year, very strong start on the hydro business, on the setting us up well for to achieve the consensus targets for the year. EDPR a little bit slower. We've talked about that on the previous call, but everything else I think going well. And I won't reiterate everything that we said, but I do think we have a very solid start to the year, and that it will continue to go well. We also have some visibility on April, which is also going pretty well. So I'd say we'll update you again in July, but we are very comfortable with the consensus and with the targets. Thank you.